Hi, it's Tuesday, and this is your weekly stock market update. Well, I hope you have your seatbelts buckled because it's been a very interesting week in the market. As you know, we found out last Thursday, Friday, that Silicon Valley Bank was failing, and then two other banks failed also. So this has just caused a lot of turmoil in all the different markets. And as we have seen, this is the Fed funds actions. That's what's happened because they've raised interest rates so quickly and kind of an unexpected recourse for the banks. Banks are, having a little trouble here, especially the smaller ones, because their deposits are shrinking at a time when their investments are down. When you increase triple rates, bonds you had purchased, and this was what happened to Silicon Valley Bank. They had a lot of older long-term bonds that were at 1.79% or so. And so when you raise rates to over 4, nobody wants your bonds at 1.79. So they were down a lot on their investments and were decided to sell them and didn't communicate that well. And so it caused a crisis of confidence, and the government has stepped in and built that back up again. And so all is seemingly okay in the short run here. What is going to happen with the Federal Reserve is that they may slow their rate hikes. And reason being, they had no idea. They need to kind of give all the markets and banks a little bit of a breather. Also, this is a major, massive disinflationary event. If banks now are, concerned and they're under more stress, they're not going to be lending. They're going to tighten. Things are going to become more restricted as far as lending goes at the banks. And guess what? That is kind of what the Federal Reserve has been trying to do by raising interest rates. So it's kind of working that way. Now, how has this affected the bond market? Last week we talked about a cow and the milk that you receive, which is the interest you receive from the cow compared to the price of beef. So what happened yesterday is that the amount of milk went down, so interest rates dropped drastically, and the price of beef went soaring up. So today it's kind of stabilized, but that's how it's gone in the bond market. Could it be time, if we haven't already, to lock in some of these rates? Potentially, yes. How did it affect the stock market? Let's go ahead and show a chart and look at that. Until this had happened, we'd had our big line, the downward trend line in 2022 that we could never break through. Well, we finally broke through in January. So that was very positive. We'd come pretty far, pretty fast. And I explained that I thought we might have a normal, healthy touchback. We were on track to do that. This is a chart of the S&P 500. And this is last Thursday before the announcement of the Silicon Valley situation happened. Well, this is the same chart kind of zeroed in on Friday. So here we were doing great. We did a little touchback. Everything seemed to be going fine. And then on Friday, after the close, it was like a hot knife through butter, just like a drastic drop, kind of a blip on the screen, but not a pretty blip. And I'm not, particularly happy about this. Is this the break of our upward moving trend that we seem to be pretty locked in on? Will we go back down and retest the lows that we had in October of 2022? Not sure. We did hold some of the these are major moving averages, which was pretty important for us to hold. This is around 3860 line on the S&P 500. We held that. So things did not completely break apart. It's just important that we bounce from here. What it did do is make me feel a little bit more cautious. It's kind of delaying when I will feel comfortable going in the market again. And that's, not a bad place to be. I'm glad that we waited, didn't jump back in the market, didn't follow any of the head fakes last year, and did not participate in this one. Again, the market needed to confirm itself. So that's where we're at, and I will see you next Tuesday.